Hey, what's up? Thanks for joining in. My name is Robert and you are watching Medicare 101 with Robert. And today we're going to go a little bit away from Medicare. We're going to talk about something called life insurance. What's the importance of life insurance and what's the difference between term and a whole life policy? So stick around, we got some cool stuff for you. Okay, so first off, we're going to start with talking about what term life insurance is. Term life insurance is set for a specific amount of time, a term. So you've got 10 years, 15 years, 20 years, 30 years, 5 years. All of it's a term, and what it does is just gives you pure insurance for that time in the event that you pass away. What I've seen term insurance cover primarily if someone buys it independently. Now there's a lot of things that people need to consider when they take out a life insurance policy, but mainly what they look at is their debts, and they go into how much debt they are and all that, and that's around about the amount of life insurance that you need in the event of, or as far as paying off your debt. For instance, when someone takes out, let's say, a 30-year term policy, well, some people do that just to cover the debt they take out on a 30-year loan for their mortgage. So that's the reason that they took that out. They don't want their family to lose the house in the event that the bread maker or one of the bread makers passes away. Okay, so term insurance is going to expire. And when it expires, then you're exposed to underwriting. So in other words, if you have a 30-year term, and let's say 20 years into it, you get cancer. Well, they can't deny you based off cancer because you've already got the policy. You didn't have it when you signed up. Okay? But they can deny you based off of cancer or something like that when you go to renew your policy at the end of the term. Another thing to note is at the end of the term, you will be older, so they are going to charge you more money if you did want to take out another term policy. Now let's flip it to whole life. Whole life is a little bit different. Whole life just means that as long as you're willing to pay X amount for X amount, every month or every year, however you set it up, you are going to have X amount of insurance waiting for you in the event of death. And death is inevitable. We all know that. We're all fully aware. It's not really a subject people want to talk about all the time, but it's definitely inevitable. And it's definitely something that people need to recognize. But with the whole life policy, as long as you keep paying the premium, you should have coverage, and you'll have coverage as much as you initially took out, and that premium will never change. So if you go 30 years holding a whole life policy versus 30 years holding a term policy, at year 31, one, you may have come down with something to where you don't qualify for life insurance at year 31. Two, they're going to charge you an exponential amount more in order to insure you, whereas the whole life, if you got it 30 years ago, it's the same price and it's the same coverage. So I don't want to get too deep into the life insurance subject. I just want people to understand that the difference between term is you've got a specific amount that you're insuring against. So it may be 10, 20, or 30 years that you're protecting yourself in the event of death. With whole life, that's kind of like saying I know death is coming. I'm preparing for it financially. Term is more like if it happens, I'm ready, but I'm here to cover a certain thing, if that makes sense. Hey guys, thank you for watching. My information's right here. If you have a question, please contact me. Again, thanks for watching. Have a wonderful day.